All right. I'm waiting for it to come up. Do I have to click on the questions to answer them? But it's not telling me whose question it is. How do I select a question and answer it?
Just read it off.
No, but look, Paul, look here. There's live chat. There's these questions here with dollar amounts, and all you sent.
Those are all of those.
But all you sent me is this. I can't tell who's asking it. I don't know which question I'm taking. It's just a list of questions.
Okay, we'll read the first one and I'll start adding their name.
All right. So what order are they in on? Based on you just picked them from
based on how they donated. And a lot of them
all right.
Usernames. So.
Okay, so I got a list and I'm gonna read off these questions. One says, Peter, why don't you short stocks or bet on the Fed doing QE4 and lowering interest rates? Why all in on gold? Well, that's several questions in one. First of all, I'm not all in on gold. I have gold as part of my portfolio. Then I have gold stocks as another part, which are different than gold. I mean, gold stocks are a safe haven, a long-term store of value. Gold mining stocks are a way to speculate on the future price of gold. So they're very risky assets as opposed to a conservative asset. The question on why I don't short stocks, yeah, I mean, people ask that a lot. And obviously, if we were short stocks, we'd have made a lot of money. And I actually thought about it, even before this big drop. I had a feeling that maybe the market would drop. But, the problem is that I'm not a short seller. I didn't raise money from clients to short the market. And a lot of people probably, wouldn't have been able to stay short the market, for the whole rally. They would have had to just got short a few weeks ago, and then they would have killed it. I mean, it's hard to do that if you're advertising as a short seller and just resist the temptation to short and then finally, do it. But my thing is, I think the people who are going to lose the most money are the people who are in cash. And, when you're shorting stocks, you're actually betting on the dollar and you're fighting the Fed. See, I think the Fed is going to sacrifice the dollar to save the stock market. And in fact, they already have done that by agreeing to all this QE. 500 billion here, $1 trillion here, another trillion, another 500 billion. I mean, it's already piling up. I was saying for years that QE4 would be bigger than QE1, 2, and 3 combined. It already is. I didn't realize that it would happen so quickly. So I want to be in real assets because I don't know when the music's going to stop on the dollar. They may shut down the stock market. It may be impossible to trade stocks in the very near future. I don't know what they're going to do. I don't want to be caught in the dollar when the music stops. I want to own real things that will have real value when fiat currency doesn't, in particular, the US dollar. So I want to own my gold, I'm going to own my gold stocks, and then I want to own real assets, quality businesses that are publicly traded in countries that are not nearly as screwed up as the United States, because I think those businesses will always have value and they will always be able to pay dividends that we could use to buy the consumer goods that we need, right? I'm not trying to time the market and finesse it, because I think at the end of the day, when the music stops, if you're holding dollars or the equivalent, treasuries, muni bonds, corporate bonds, I don't care if your money is in the bank or under your mattress, you're getting wiped out. That's my feeling. And I think we're closer and closer to that hyperinflation scenario. So I want to know that my long-term savings are in real assets and my short-term liquidity is in real money, which is gold. I don't know who asked that question, but I'm going to go on to the next question. Do you think millions of rapidly unemployed people will be an unprecedented phenomenon and financial strain? Of course, of course. Forgive me for drinking. My mouth is getting running dry. But look, this is going to be worse than the Great Depression. Much worse. When the Depression started, we had a much more viable economy. We had no welfare state. Nobody was on welfare. They didn't even come up with welfare until the Depression. And, they called it the relief, right? And a lot of people were embarrassed to take it. People didn't even want the money. There were actually some people who paid it back once they got their jobs. They actually felt so bad about getting money from the government that they gave the money back. So we were a nation of rugged individuals back then. Nobody was on welfare, food stamps. There was no minimum wage. None of this stuff happened. People supported themselves, fended for themselves, saved for their own retirement. And so, they were able to handle the depression, and there was a much higher degree of civility back then. Today, it's a totally different story. We have a complete dependent society. Everybody feels entitled to something for nothing. Everybody thinks the government owes them something, that just because they're an American, they're entitled to all sorts of free stuff. And when that free stuff isn't coming because there's shortages, and there's going to be shortages, price controls, rationing, bad things are going to happen. People are going to be rioting. There's going to be civil unrest, looting. This is not going to be like the 1930s. This is a very different country, unfortunately. It's a very different group of people. And so, this is going to be mass unemployment. This is going to be tough. That's why, in addition to having food, make sure you're armed. Make sure you have ammunition. I don't know how bad this is going to get, but would anybody have believed? Go back in time a few weeks ago. Could you believe what is happening right now? Can you believe the crazy things that we're hearing from the White House, from everybody, in financial media? So if all this stuff could be happening, how far away are we, from riots, from, blackouts and shortages and people having to defend themselves because the police aren't on the streets anymore because they're defending their own families, right? So, better to be safe than sorry, right? Better to have a gun and not need it than to need a gun and not have it. Anyway, let me go to the next question. Peter, what's to stop the inflation to going into the stock market? And how do you know it'll hit the supermarket? Well, it's not going into the stock market. One of the reasons I didn't really want to short it is I personally expected that if the Fed really came with this much QE, that the market would at least rally. It hadn't done that. The bubble is popped. None of this money is going into the stock market. They can't reflate this bubble anymore with everything imploding, the whole world. It worked in 2008 because it was much smaller and because everybody believed that QE was temporary, that the Fed could shrink the balance sheet and normalize rates when the emergency ended. Nobody is going to be dumb enough to believe that nonsense now. So this is going to the people. And of course, the QE that we're talking about now is money directly to the people. When the government prints money and drops it, figuratively out of helicopters and sends money to all these people that are unemployed, right, that can't pay their rent or can't pay their mortgage, they're not going to take that money to the stock market. No, they're just going to buy whatever they can. They're going to buy on Amazon until Amazon runs out of stuff, right? Or they're going to stock up on supplies. So all of this is going to goods. And the people who've been invested in the stock market, they're broke. They're already all in. We had record amounts of people in the stock market. President Trump, the whole time he's been president, has been touting the stock market, bragging about the stock market. We were at a record high just a few weeks ago, last month in February. How did we get to record highs? Because everybody already plowed all their money into the stock market. In fact, margin debt, people borrowed record amounts of money to buy stocks they couldn't even afford. They're just getting margin calls. So you know what's going to happen? People are still selling. We have an army of people who are going to lose their jobs, who are going to be selling their stocks. This selling has barely begun. That's why this market can go down 80, 90%. Look, in terms of gold, the Dow's going down to 1 ounce, right? The record high for the Dow was 20 years ago, 1999. The Dow was worth 42 ounces of gold. You need 42 ounces of gold to buy the Dow, right? It was because the Dow was, expensive. Today, you can buy the Dow Jones for 13 ounces of gold, approximately. That's a 70% decline in the real value of the U.S. stock market since 1999. Now, what I've been saying the entire 20-year period that we've been in this bear market, and we have. See, if you're pricing stocks in dollars, you think we're in a bull market. Problem is the dollar is also losing value. I'm pricing stocks in gold. I can see it. We're down 70% over the last 20, 21 years. Is worth 1 ounce of gold. Well, we're at 13 now. We got a long way to fall. 90% still from here. Now, how do you get there? Well, one way is 10,000 Dow, which is about a 50% drop from here, and 10,000 gold, which is about a 5-fold increase. That's not hard to do. That's where the market bottomed in 1932. Talk about the Great Depression. Dow went down to 1 ounce of gold. Dow also went down to 1 ounce of gold in 1980. So why can't it go down to 1 ounce of gold now? It can.